So fear and greed is really, really important for a number of reasons. So when we look at the STAR trading methodology, for example, we've got 5 points of that methodology. All of those 5 points need to be mastered to be the best and most profitable trader that you can be. So when we are looking at the fourth element of that, which is mindset, two of the major emotions that come into impacting our mindset are fear and are greed, or is fear and is greed. So when we're looking at the markets themselves, the markets are moving based upon people pressing one of two buttons. So either pressing the buy button or they're pressing the sell button. The motivating factor between those two button pressing things is fear and greed as well. So when we're looking at financial markets, what we're really doing is we're trying to gauge mass group psychology, and that's what's going to allow us to identify which direction the market will move into next. And really all of technical analysis, all of trading in the STAR trading method comes down to, can we accurately identify, more often than not, because we're never going to get it correct 100% of the time, what direction the market's going to be moving in next. And fear and greed are two of the massive factors which play a role in helping us make that decision.
How do we read that into the markets?
Really good question. So we are using patterns. Part of the STAR trading method is pattern recognition. So when we look at chart mastery, element 1, it's what are the patterns that we're seeing. So where are we seeing opportunities where there may be a big sell in the market, a big sell-off in the market that we can capitalize on as well. So where is that opportunity? Or where are the positions in the market where we're seeing big opportunity to buy, because maybe the market's quite low, it's been moving down for a long time, and now it's giving us this signal that it's ready to go up again. So that's why it's really important that we understand it when we're looking at the market.
That's so interesting. And then in terms of our own fear and greed, how does that play into our trading?
It's everything. It really is everything. Like I said, mindset mastery, emotional mastery is probably the most important skill. People think it's the technical side of trading which is the hardest. It really isn't the hardest part of it. It's actually the easiest. It's just the one we, before we start, think is going to be the biggest hurdle, because we've got our own insecurities, our own limitations about what we think it actually means to trade in terms of math skills and graph skills and all of that, which you really don't need a lot of that at all. So when we're looking at the mindset element, understanding our own natural tendency of fear and greed, because I've kind of changed, to be honest. When I was younger, I was very risk happy, more greed based. I wanted the big house, the nice car. That's kind of what my motivator was. As I've gotten older, and actually I don't think it's to do with age, I think it's actually as I have more wealth, my focus now is more on protecting that wealth rather than risking the little I had to get more. I'm more about protecting that wealth now. So that impacts my trading too. So when I first started out my trading journey, I was probably placing more trades than I should, because I was so eager to get into the market. And in previous episodes, we've talked a little bit about how your trader personality can impact that as well. And so my greed-based decision making was making me place more trades. Whereas now I'm more fear-based, because I'm looking more on the protective side. I sometimes don't place as many trades as I should do. Whereas what we really want to do as traders is not be influenced personally by fear or greed. We want to be as balanced as possible, as neutral as possible. And the way that we do that is follow a system.
That's amazing. Because my question was going to be, okay, if I'm feeling really fearful, how do I get out of that? Or if I'm feeling really greedy, how do I get out of that? And the answer seems to be follow the system, follow the criteria, get your emotions out of it, and just go down your tick list. And if it fulfills the list, take the trade. And if it doesn't, then don't.
Yeah. And that is so easy to say.
Yeah.
Right? So what's the emotional element behind that? And we talk a lot about this on our mentorships and our trainings, about removing the emotional burden from your trading. And that's positive and negative, right? Because we want to be as neutral as we can be. So when we are looking at a tradable opportunity, there's the system that we overlay onto the market, and then brilliant, does that meet or does that not meet? Something weird and wacky about the brain will warp that image and make us think there's an opportunity when there isn't, or make us think there isn't an opportunity when there is. So how do we build mastery around our emotions? Part of that is actually building mastery around the system. So in the last week's episode, we were chatting about what does what does backtesting mean? Why do we do it? Why is that data so important? And this is part of the reason why it's so important, because that data builds our confidence to be able to stick to the strategy, and that mastery of applying the strategy correctly. Then when emotion does get involved, the volume on that emotion is going to be lower, and our ability to stick to the skill set and stick to the strategy will be a lot easier.
Yeah, okay, because I may be a few weeks away from live trading, but I imagine I'll feel quite fearful of doing that, hitting the button.
Yeah.
So I just need to go back and look at all the homework I've done, all the data I've collected, all the good results that I've hopefully had by then, and just have confidence in that and myself, and feel the fear and do it anyway.
Feel the fear and do it anyway. And we know that we don't win 100% of the trades that we take. There's no such thing as a 100% winning strategy. So in our early days of trading, every loss, every losing trade, or we like to call it the cost of doing business, because trading in essence is a business, because businesses make you money, or should do, and hobbies cost you money. So we don't want trading to be a hobby, we want it to be a business, we want to treat it with that respect. So when we're treating it with that respect and we're looking at our data, we know that we don't win 100% of the time. Our first trade may not be a winner. Now, I would love it. I would absolutely love it if every single one of my students' trades won, or at least their first trade was a winner. But that doesn't always happen. So if they have a loser, or if they have a couple of losers, like straight off the bat, that can really knock their confidence. So how do we rebuild that confidence? We go back to our data. So you've created that. You know this is how the strategy does perform. And that data tells you how often you're likely to get losers, how often you're likely to get winners, what the balance is, what the ratio is between those, what the worst losing run is, what the best winning run is going to be as well. So you've got all of this information that can help steel and strengthen your resolve to stick to the process and the strategy.
Amazing. So what is your best advice for people feeling emotional when they're trading?
Have a drink. No. We sometimes we call it a fridge break. So Josh Jones, head mentor, who was a guest last week, he talks about having a fridge break. I like to just have a mental break from the screen,
that's good.
go and do something else. Personally, for me, I reset quite well in nature, so I'll go for a walk. So it's a pattern interrupt for my brain. So if I'm feeling quite emotional, for whatever reason, I'll pattern interrupt, I'll go and do something different, I'll come back and look at the market again with fresh eyes. It's really, really important to do that. So if you're feeling emotional, I think actually the first thing to do is recognize that that's normal. You're a human being, and actually as human beings we are pre-programmed to avoid risk at all costs. Like we are self-protection creatures. That's the way our brain is wired. And if we don't know automatically the outcome, our brain works on this thing called a prediction loop, and if it can't predict with certainty what's going to come next, it goes into panic or it goes into protection. So that's why it's very natural to feel, especially in your early days of trading, nervous, a bit anxious about placing the trade. But how do we master that? Repetition. Keep going, remind yourself of what the data is, but there's certain lessons rather that you can only learn by trading it live. So feel the fear, do it anyway, and again, remove the emotional burden, right? So do you remember from our previous podcast, what's the maximum amount you should start with?
500 quid.
500 quid, yeah. Absolute maximum 1,000, around about 500 quid. So that's going to remove the emotional burden as well, because we're only risking 1% of that. So on £1,000, that's £10. So we're actually really low risk, which should make it an emotionally low charge for us to place that trade.